Hello, everybody. I'm Toby Gennaro, and got a decent-sized crowd on this morning. So let's do a sound check as we normally do, and make sure the sound and you can see the current splash screen. It says live technical analysis, market movers for today, May 22nd. Make sure that's all coming across loud and clear. If you guys are getting all of that, just kind of give me an electronic high five via the question box on your screen. Let me know that we're all good technology-wise, and then once we get that done, we'll get the recording started. And we'll jump into the content for today. Great, guys. Thanks for doing that. Looks like we're all good technology-wise. I'll give Chip a minute to get the recording started, and then we'll do a formal introduction for recording purposes. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for today. The topic for today is live trading with Nadex contracts. I'm going to be talking through a series of specific trade setups in real time that I'm seeing in the markets. For those of you that are on the live webinar this morning, if you have questions during the session, please do type those into the question box on your screen. I'll definitely be asking you folks some questions. We'll really try to keep this interactive, which is certainly the whole idea behind these live sessions. Just by way of formality, let me put up this risk warning and disclaimer. Need to do this as part of the business, so I'll leave this up for about 30 seconds or so. If you all could just have a quick read through, that would be good. What this is saying in brief is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that? Okay. And just one more disclaimer here from Nadex, a short one. If you can have a quick read through this one, that'll wrap up the disclaimers for this session, and we'll move on to bigger and better things. All right, so let's everybody good with that? So let's get started here. Now, to kickstart your trading each Tuesday, you can utilize this regular feature from the trading team here at Trade with Precision. With so much going on in the markets each and every week, how can we actually spot opportunities across multiple markets and multiple time frames? That's usually the big question for folks. So make sure you join us weekly for this insightful live webinar where we will focus on technical and trend analysis across a variety of major markets to help answer these types of questions. Let's go ahead, jump into some of the live charts here, see what kind of trading opportunities we can find for today. That's really the objective for this session. And just before we do that, what I do before the session is I take a look at a number of charts, and I kind of look through and consider which ones might be a good potential for identifying trading opportunities. So a couple that I identified here, one is going to be the S&P 500 that we'll take a look at. Everybody usually follows that one, and then we'll also take a look at a foreign currency. We'll look at the dollar yen. So let me just set up my charts here, and we'll get everything lined up. So if you guys can see my current screen, let me just double check my information here. So if you guys can see my current screen, I'm just going to be using my own charts here to kind of walk you through. And the reason I do this, Nadex actually has a pretty good charting system in the package itself, the platform. But I like to be able to show you guys multiple time frames and be able to click through them relatively quickly so we can get through the content in the time allotted, because we're only going to have about 30 minutes to go through these two sets of charts. And so I do this because it's just easier for me on my end. But the charts on Nadex are very good. They've done a lot of improvements to those, and also you get all of the data for free. So that's a huge bonus as well. But just kicking things off here, I wanted to go through the S&P 500. I haven't taken a look at these in quite a while with you guys on the Tuesday webinars. But I was just looking across these this morning, and especially on the higher time frames, I like the setup here. I'm not overly bullish on the markets. I mean, I think we're kind of arriving at a precipice here. But the one thing I do like is I like this pullback over the last couple of months. I like that candle right there that's closed out for last month, kind of a small indecisive candle right in and around that buy zone, which is the trend flow trade setup that we like in between that 10 period and the 20 period moving average. For some of you that don't know, we have four moving averages here in the way we set up our charts. There's the 200, which is green. There's the red, which is the 50 period, and then the 20 period in blue, and then the black or the gray is the 10 period moving average. And so we like to see all these fanning out to the upside, equally spaced out, going in the direction of the predominant trend. And then once we get overextension from the moving averages, we like to see that pullback into the moving average zone like we've seen so many times, and then getting some nice bullish candles setting up for the next move higher. And so we can see this, those last couple of months of this pullback in and among some of this congestion on the weekly chart, which is the next time frame down. Yeah, we've got a number of bullish candles in and around here, kind of a consolidation, some moves out of the zone and then pullbacks into the zone. That'll be typical as we look at the monthly chart. That's going to be comprised of the most recent 4 months. But most recently, the last couple of weeks here, 4 or 5 weeks, we have a couple of nice candles right in and around there, and then a very nice bullish candle that broke the high of both of those candles. And we've continued to, looks like, put in just slightly new highs above that nice bullish candle right there. And so that looks very, very positive to me when I'm looking at the charts. As we go down to some of these time frames like the daily, we can see that monthly and weekly chart activity replicated right here in kind of a sideways motion. But as you can see, we're still getting a swing low here, we're getting a higher low right here, and then we're actually breaking out to another higher high right here. And actually, we've got 2 touches right there at a critical point right around 27.41, and it looks like more than likely we're going to break out of that level going higher once again, and potentially might even get back up to this level up around 28.80, up around thereabouts. And so in between here, we've got some, some levels right around that 2,800 level that we might run into. Might set up a flat level around there in the future, and potentially even push higher. There aren't a lot of great geopolitical events going on. Interest rates are rising, so there isn't a whole lot to be bullish about. I'm just looking at the technicals here in terms of, what things look like potentially for the near term. And so we can see this right here on the 480 chart. That all looks positive from the daily, the weekly, and the monthly. Here's where we start getting a little bit of bearishness. I just want to show you kind of both sides of the chart. Right here, we can put in, I'll just put in a line right there so you guys can see it. Let me get some color on that for you. And so this was the most recent touch right here, some time ago, several days ago, and then we've actually made another touch right around that 2740 level. And so we still have, higher lows. Now we have equal highs going in. Now we could actually pull back again and then touch again. That would probably be very positive. But even on this second touch right here, we've got quite a bit of bearish divergence right here. Doesn't mean that the market's going to reverse off of this level. It just means that if we do get a pullback and another touch and a move back up to this level, we could start to set up a flat level right here, and we could start to potentially move into more of a grind to break this level, and then potentially grind higher into some of these levels like 2,800 and closer to that 2,900 level. As we move down in some of the time frames, we still have all the moving averages fanning out. They're all looking pretty good. You can see here again on this equal touch. We don't have a higher touch, but we have an equal touch. We have a significantly lower touch on both the MACD and the RSI. And so what we're looking at for is we're typically looking for a strong part of the trend, like here where we have a higher high. Right here we have an equal high, and here we have a higher high, and we continue to trend higher with these indicators. So here we have a high, a higher high, a higher high, and we're basically mimicking the higher highs in the price action. As soon as we start to set in equal highs or higher highs, and we start getting these lower highs right here, that's going to be called divergence, which tells us that the trend is potentially weakening at these levels, like this level up around 2740. So it doesn't mean that we can't continue to look for opportunities to trade longer, because we have, the monthly, the weekly, and the daily all trending higher. It's just, we just want to be cautious and make sure that we understand that there is a weakening trend here. We might need a little bit of a pullback to kind of reset and then potentially make another run back up at this 2740 level before we actually have a breakout. So we could see maybe 3 or even 4 touches at 2740 before a breakout. The market could break out right here. I wouldn't anticipate that, but it certainly is a possibility. I'd be looking for more of a flat level and then making sure that I don't have a lot of bearish divergence on the indicators across multiple time frames to ensure myself that I don't get, a false breakout and then a reversal of this particular scenario. So just a couple things there to look at on the S&P 500 to make sure, you're not caught, hanging on, going long, waiting for that 2900 level, and make sure you're reading the charts accurately in terms of, the price action that we're looking at and all the things that we need to consider for, for optimal trade setups. So in looking here, we've got higher highs, higher lows. We've got a pullback into the moving averages here. As we move down to some of these other time frames, like the 1 hour and the 30-minute, we've actually got some bullish candles right in and around the zone. We don't have too much bearish divergence right here. It's not too bad, but we do have a little bit more on the 30-minute chart. So I wouldn't be too excited about trading this long, even though it looks more than likely like it's probably going to break out to another high. There have to be some times when you look at the charts and say, hey, you know what, that doesn't look all that positive to me and all that bullish. I'm going to look to kind of hold back and wait for a better setup and just a stronger overall trend layout. And so that's kind of my feeling here on the S&P 500 and looking through the charts. I think for me, I still need just a better setup on like the 480 right here without as much divergence here. If I can get 3 or 4 touches along a flat level, that'd give me a lot more confidence that I can see a breakout that is imminent, which would pretty much take us up to that 2800 level and then beyond. But for right now, I'm not seeing that. Right here on the daily chart, looks fairly positive, but we're still at that key level right there, right around 2740. And we still have some nice moves higher with the higher highs here. So that all looks good and looks positive. And then on the weekly chart again, we're looking fairly positive with all of the bullish candles here over the last 5 weeks. So all of that looks good. I wouldn't be surprised if on the daily chart we broke this 2740 level. But as I move down through and looking at some of these levels right here and just looking at the charts, I just want to be careful about that. I'm not looking to take any unnecessary risks. So at this point, it's a no trade for me, but I just wanted to point out some of the bullishness on the higher time frames and then understand when you get conflicting information from both the higher time frame trends as well as some of the lower time frame or intermediate time frame setups, what to do with those. I always like to err on the side of caution. I hate losing money, and so when I can't get the bulk of the charts in agreement, then I'm just going to look to back off of that trade. So I like to cover some of those to make sure that you guys understand how I'm reading the charts. A lot of trading is really about it's really about risk management, right? And the more and the better that we can manage our risk helps us overall in in our success. So if you have any questions about that, shoot over some questions via the question box on your screen, and I'll be able to respond to that. Meanwhile, let's take a look at the dollar yen and see what that looks like. And so here on the dollar yen, if we can actually get the charts up, there we go. And just again, always like to look from the highest time frames down. It's called a top-down view of the chart. So I always like to look at the monthly and the weekly, get my alignment in terms of, is the market bullish? Is it overall bearish from a higher time frame? And then start to move down through the charts and see what things look like. And if everything is in agreement, or like the last set of charts, if things are kind of contradicting contradicting each other from higher to lower. So here we've got, a nice pullback on the monthly chart for quite almost a year's time there. And then in the most recent year, we have really kind of a lot of sideways action. So if you've been following the charts on the dollar yen, a lot of sideways action here in the most recent months. But here in the last few weeks, we've kind of bottomed out around that 104 level, and we've been kind of churning higher. And so just, really a lot of sideways action. We can see here that we had this flat level, but that didn't get broken through. It actually rejected. You can see that we have on this breakthrough, that little higher high, we had actually a significant lower high. And that's why I'm concerned on the last charts on the S&P 500. When you start to see that, these are the types of things that can happen, off of those types of flat level setups. You think you're looking to trade a flat level break higher, and all of a sudden you just get a small break out right there, and then the whole thing rolls over, because we've got some, identifying criteria here that say, hey, you know what, there's a lot of bearish divergence here. Trend might be weakening at this point, and you might want to be very careful about what you do. And so I always want to respect those types of identifiers that I see technically in the charts. And so we've had that kind of washout. We've had the breakdown. We've got a run coming back up. So I can't really tell anything by looking at the weekly chart right here as to what's going to happen next. I don't have all of the moving averages fanning to the upside. They're actually kind of fanning out to the downside, but they're kind of turning up here. So I don't have a lot of information there that gives me any way to identify either way what's going on. The earliest possible identifier I have here is on the daily chart. So we have a number of nice higher lows and higher highs. We got the 50, the 20, and the 10 period moving average all fanning out. The 200 looks like it's trying to sneak in there. But as long as we have three of them, that's usually fairly decent for an intermediate term trade setup. So I like the look of that right there. We're churning higher with every higher high on the price action. We're doing the same thing on the indicators. Here on the 480 chart, very nice. We got all four moving averages in alignment. Just had a pullback here. And we've got some nice indecisive candles setting up. So in looking for a trade setup, I would just continue to follow that down and look at the 240 and the 120, where I've got some decent candles setting up here in the buy zone. I don't really have anything that's, this one right here is a fairly decent rejection candle. We've actually broken the high of that, but we're still flirting around in that zone. I like this one right here, a couple of nice bullish candles right there, breaking the high. Everything here looks, there is a little bit of divergence here. It's not too bad. It's kind of straight across. I would think we might be able to take another run at that 111 level. I don't see, let me see if there's anything else here below. The 60-minute chart looks pretty good. There really isn't anything here on the 60 or the 30 that would necessarily prevent that, other than the fact that the moving averages are not in alignment. So I can't use these charts necessarily for a trade setup. But in looking at some things like this, where we're putting in a lower low versus the lower low we had right here, you can see that we're actually putting in higher lows on the indicators. So whenever we do that, it's almost kind of like a reversal pattern setting up here with a lot of bullish divergence. So even on the lowest time frame, the 30-minute, it looks like there's something here that would, sense that or tell me that there might be a bounce going in the opposite direction. And then as we move down to the 15-minute chart and even the 5-minute, we can start to see some trends forming their way up. So, my best effort would be on looking at the 240 and the 120 here, and looking for, I still want to see a nice bullish candle on this last candle right here, just to make sure that we don't get a breakout of this candle and an outright rejection of that candle. So if we can get a nice, some nice bullish action closing out this candle pattern right there, I'd like to look at these two charts for a potential move higher back up into that 111 level. So in looking at the Nadex charts, we can look at the dollar yen. So we'll look at the Forex binaries, and we'll take a look at dollar yen. and show you guys how to take a look at some of these. Now we're looking at the 240 and the 120, which is, the 2-hour and the 4-hour charts. So more than likely, let me just go back to that chart. More than likely, it took on the 4-hour chart 1, 2, 3, 4, 5, 6, 7, took 8 candles so far on the pullback. So that's roughly 8 times 4 is basically 32 hours of a pullback. Now, usually when it pulls back, it takes a lot longer than when it makes its move higher. Like here, it set up a nice bullish candle, only took 4 candles, basically 16 hours to make that move higher. So I'd probably think maybe, something along the lines of about 20 hours would be reasonable to give myself enough time for this to set up. So right here, click through some of these. This is 39 minutes. Obviously, that's too short. We've got the next one here, which is an hour. And then we've got 14 hours. It's a little bit better. 18 hours is probably something that I might want to start looking at. And then we've got 22 hours, which I'd probably even favor a little bit more. And then I think that's going to be the highest one. So the 22 and the 18, pretty decent. I'll take a look at this one right here. And the 111.20 is going to be, actually the 111.20, the 111.40 is going to be that most recent high. So those would both be some reasonable contracts to trade on this particular scenario. So I'd be interested in looking at those two. And then also the 111, which would be trading at 50 going long. That still gives me a 1-to-1. I might even have a combination of any one of these 3 contracts going long in case, it takes a little bit longer than I thought for price action to move. I might still be able to make some money on this 111, the 1-to-1, but I might, lose money on the 111.40 because price is maybe not moving as quickly as I thought it would. And so there's an opportunity here where I can potentially make some money on 1 or 2 contracts, but I might take a loss on the 3rd contract if I'm trading these 3 as a group. And so you can work out, in your own mind, you might trade, or I might trade, 1 contract at a 1-to-1. I might trade, 2 contracts, at 33 at a 2-to-1, and I might trade, 4 contracts at, something like a 4-to-1 reward to risk. And so, looking at it in that type of light, I give myself the option for the price action to do a lot of different things, and I don't stack up all my eggs in one basket when I'm looking for a trade. So, and then obviously I'm still only risking 1% of my capital when I'm doing that. So I'm just breaking down the contracts differently to try to leverage, the price action in doing what I think it's going to do. So that gives me about 22 hours. So it gives me roughly about 5 candles worth of action on that chart, which from looking at the past price action looks fairly reasonable as far as what I think might happen. But I'd really be interested to see what this last candle here might look like. So I'd be interested to wait for that candle to close out before looking at any type of trade to see if that's actually bullish or if it actually turns quite bearish, and that would certainly be of interest to me. So, looking at that, I don't know if there's anything else on this chart. All of the indicators here have gone flat, which is fine, even though we have higher highs on the price action. We still have higher highs on the MACD, which is good. These right here are just slightly lower on the 120. So there is a little bit of divergence, but the one thing about the trend flow trade setup, and that's the pullbacks, which is different than the flat level setups. On these pullbacks in the trend flow trade, we can trade these types of charts with some slight indicator divergence. And so that's pretty typical for this trade setup. And as we look at some of the higher time frames, we can see that even with this higher high, we have some slight bearish divergence there. On the RSI, it seems to be trending higher with some of the most recent price activity. And then obviously on the daily chart, things look very strong and things continue to churn higher. And we still don't have a whole lot of overextension from the moving averages. So the daily chart would really be my anchor chart in this case, which looks fairly positive at this point, which gives me some confidence in the trade setup here that we're looking at on the 240 and the 120. So there are no guarantees in trading. The markets are in control of the price action. So that's why we always manage our risk, and that's the beautiful thing about Nadex contracts, is that your risk is managed with the inherent nature of the binary contract and the option type scenario that we're looking at. And so all this again, I like the look of the charts here, and the two higher time frames, the monthly and the weekly, don't really do anything for us. So all I do is then move down to the daily chart and look for that higher time frame anchor. And what that does for me, it just tells me, hey, you know what? I don't anticipate that the market's going to make a major move up over like the next couple of weeks, the next couple of months. But by using the daily as my anchor, what I'm saying to myself is hey, more than likely there could be a chance that the market could move up over the next couple of days based on the strength of this chart. So I just optimize my thinking and my chart rationale and what I'm trying to accomplish with the trade setup, and that's why I'm looking at a smaller time frame trade in that 20 to 24 hour time frame, because that's what jives with my overall read on this particular setup. Okay, so let me take you through one last detail here on the charts, or on the slides rather. And then we'll wrap up. And what we're going to do is we're actually going to come back and spend the remaining half an hour after we wrap up the first section here. We'll spend the last half an hour on going through a number of charts and markets that you guys might want to look at. We'll get a little bit of dialogue going. So this is just the first segment that I'll wrap up here for the first half an hour. But what I'd like to help you understand is that Nadex is really just making an investment in your success as an investor. So what we've done is we've worked with Nadex to put together an advanced education package that's presented by Trade with Precision over 3 webinars, 1 hour apiece. You don't have to go anywhere. You can watch these from the comfort of your own home. The Trade with Precision trading team will be conducting these as live interactive webinars. So you have the ability, just like today, to ask questions about the content, work on trade examples, things like that. So we'll show you all the ins and outs of some of the trade strategies that we looked at today, and show you exactly how that works. So this is an education package that is free to anyone with a Nadex account. So it's valued at well over $900 if you buy it directly from us, but it's a complete freebie if you decide to do that with Nadex. You can get in touch with them at the 1-800 number and see when that's coming up, and get yourself signed up. A couple of different ways here for you guys to get in touch with us via phone and email. That's listed here for any other questions that you may have, or you can ask me your questions right now as you've been doing by utilizing the question box on your screen. Demo accounts also available to provide you folks with some familiarity with the contracts and what we've been talking about today, so you can kind of get an idea of how they ebb and flow. For current members, if you'd like to begin trading again, just log into nadex.com, take advantage of the advanced education webinars. I think it'll help you to take your trading to the next level by giving you some more technical analysis to work with. If you're completely new to Nadex and you'd like to set up an account, just go to nadex.com. Once again, click on I believe it's the orange box in the top right. It says sign up. Just fill in your details there, and then someone from Nadex will respond via email to get you set up and get you started. So again, before you sign off, there is a short survey upon your exit. Please let us know your thoughts. But if you'd like to stay on a little while longer, we'll wrap this up with another half an hour and take a look at a whole host of other charts and other markets that you may be interested in. So stay tuned for that. For all the rest of you that are leaving, have a great rest of the week trading.